Hello, today is the 20th of June, 2012. It is approaching 2:15 p.m. Eastern as of the recording of this video. This is about my third or fourth take of it, and my last one was pretty good. It was just 12, 13 minutes, and I want to make this quick. So I'm going to try to make this 6 minutes. Let's get started. This is 11:04 a.m. Eastern Time. Thing to notice, the 18 average of lows, highs, and closes. The 18 average of highs is barely declining. The 18 average of lows is pretty much flat. And the 18 average of lows is pretty much rising to flat. And then 11 minutes later, price went from 28.21 up towards 28.43. So that was a 22-cent move in a period of 14 minutes. And as of a half hour ago, and not much has changed since, this chart looks like this. It's about a few cents higher as we speak. Alrighty, so what we're seeing is that we had a bigger breakdown today. We'll look at the 10-minute chart at the end of this, but notice now that the 18 average of highs, which was declining barely, has now went to flat because it made a new high earlier after the 11:15 a.m. video, or chart anyway. The 18 average of closes is still pretty much flat, and the 18 average of lows, which was flat to rising, is now declining because it had a significant break below. And the bottom was actually pretty, not going to say easy to call, but I'm just going to show you where the first level of support was on the short-term time frame, and it was pretty close to hitting. And that didn't mean it was going to be a bottom, it was just the first level you look at. Anyway, let's go over some of these trends, and I've talked a lot about the fake outs, the failed moves, and to look for them even too. Well, here's the deal. We got two patterns, both got the exact same support line. One, you got this ascending triangle, and you've had this major level of resistance. Everyone can see this. They see a failed breakout, they see a failed breakdown. There's going to be one or the other. This could be a situation where maybe we find support, we find resistance now where we found support. Or that breakdown earlier today is the failed move, which would enable a fast move, and you need at least a move up to this 30 level to consider it to be a fast move. And that's the lowest, of course. Anything higher, of course, it would still be fast. So that's the basis there, and of course you got this symmetrical triangle as well. It's pretty standard. You're at the end points of it. It's got to break out fairly soon, or confirm that this market is going and staying neutral, because we've been in a sideways consolidation now for this period. Okay, let's move on now and take a look at this on a shorter term level. And why the shorter term is important is because we know from here that if it's going to break down, and the breakdown is either move down to the previous low, breaking that is just barely below this is 26, and barely breaking below that is that 18 to 23 range, basically. I'm not giving 25 much for psychological support. Maybe some might, but I can't, because it's just a dollar move below 26, only 4%. I'd be looking for larger percentile moves on a break of that larger level. So that's the downside. Upside, well, you can see it here. Breaking 30 is up towards 32.66, and on a longer term level, 33.58 is also a big level. So probably this range, probably in here, would be a good band. Okay, so that's what you're looking for in the short-term analysis, which can explain what happened today a little bit. This is what we got. Now, the reason why this bottom wasn't so hard to predict, and I'm just saying this, all I'm saying is what the first level of support would have been on a break below this significant level that had 3 hits. Because what I'm doing is I'm looking for these two Fibonacci lines to match up with great areas. And the obvious one is here. And then if that's got to be here, this one would obviously be about here. But you notice that it was lower than that. So it meant that your first level of support would probably would have been about here. Would you have gotten stopped out on this move? I would hope not, because then you're giving yourself hardly any, or your risk is so low that you're bound to lose quite often. But by buying there, if you decide to buy there, it happened to work out. As long as your stop was obviously here or lower. And if you sold your shorts at that time frame, hey, that was close enough to the bottom. But when you look at the message of the market since this point in here, you find resistance at the first level, which was also an area of previous support. So they go hand in hand. Oftentimes they do. You have your pullback, and then from your pullback, what you get is a situation where you go up here, which was not really up to this line, and then you pull back. Now, I don't know if you can't tell if support was found here or not. You can't tell simply by looking at this second green candle. It's impossible. Of course, you'd have to shorten it out to the 1 minute time frame. If you want to check yourself, other charts like NetDania, Forex Pros, or SLV on the 1 minute time frame should show you. But anyway, regardless of the fact, it did have some sort of support back, did not find resistance here at all. Although if it did, it might have been 1 minute, 2 minutes, 3 minutes again. And it's good to know that if you don't find support where you're supposed to, you got to watch for two things. On breakouts, you watch for the big fast moves higher and that level to be support. On breakdowns, if say this area wasn't support, you'd be looking for a big move lower or for this level to be resistance. That's what you'd be looking for. And that's why if you do buy at levels where it's going down like this, you really want to protect your stops, because if this thing keeps capitulating and you'll be now saying that this support level is going to go here. That's basically what you'd be saying. Alright, so now when you move this on further, it's pretty much been finding support there. What happened since, there's about 3 more candles afterwards. It went sideways and then went up to 28.50 and then back down again to here, 28.40 basically. So it's consolidating well. And because it's held well above this for 6 periods or so, you can only see 3, but like I said, this is a little older from when I'm recording this. There's been about 6 periods since. It's consolidated well. So therefore, I like the chances that it breaks above this level here compared to, say, going here first. That's the first thing. What the chances are, I'm not sure, because it's holding above it. I like the chances that it's at least going to test this level here. And when you notice maybe that it breaks above here, well, it's not even really worth it too much. Because if you look at this for the longer term time frame, you need to see a clear break above this and a break above 30. At least, at minimum. And for the failed move, 28 psychological is huge. It is very, very massive. For if it doesn't go higher, say that it tops right now and it closes today at 28.10 or something, that's no big deal if you're looking for it on a bullish case, but you are at an area where it's important to hold, because if it stays below 28 for anything more than, say, 3 or 4 hours in a row, then it wouldn't be looking so good. But until then, just adjust to the message of the market and take care. All of these charts are available in the directory link below. Take care.